Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving a price prediction update on Harmony One, whose current price stands at the $0.02136 mark, and here on TradingView the market is down by 4.26%. We are seeing a little bit of a downside after seeing a recovery yesterday, and in this video I want to give you the key scenarios that I expect, and I'll be basing my analysis on the Elliot waves and the Fibonacci's, also the key areas of supports and resistances. So if you're interested in such content, make sure that you stick around till the end of the video. I'll kickstart the video by giving a brief of what has been happening on this chart. From the all-time high, Harmony One has been seeing lower prices in this massive ABC correction, which has taken us now to around the $0.016 mark, and I believe Harmony One has done whatever it needed to do in its ABC correction, and soon we might see that reversal to the upper side in this Elliot wave pattern, having a wave 5 taking us back to an all-time high. And in this video I'll be analyzing using the 4-hour chart to give the key scenarios that I expect to play out. So this is the 4-hour chart for Harmony One, and we have been seeing a bit of a recovery to the upper side after having this impulsive move to the lower side and touching that key area of support at around the $0.16 mark. And then we had this breakout of this channel that we had been trading within. We broke out of it, even went to another key area of resistance at around the $0.022 mark. We broke above it, had a retest, and continued pushing to the upper side yesterday to around the $0.025 mark. And at the moment we are seeing lower prices in this retracement to the lower side, and this chart is playing out according to plan. In my previous videos I had said that I expected this move to the lower side, and the reason as to why I expected that move to the lower side and even made this yellow target is because if I apply the fibs here from this high all the way down here to this low at around the $0.16 mark, you can see that this yellow target is between the fib level 0.382 and the fib level 0.618. That is the minimum that I expected that retracement of this wave to the upper side to do, and that happened. We touched perfectly on that yellow target, and now we are seeing that retracement to the lower side, and at the moment we have lost the fib level 0.618, and that would mean it's possible that we continue unlocking even lower prices, and that would take me to the first scenario that I expect to play out here. It's possible that we continue pushing to the lower side and go to around the $0.19 mark, where we have our key area of support, and that key area of support perfectly coincides with the fib level 0.786 fib level, and it's possible that we might find support within that area and then have a nice bounce to the upper side, and we break above that key area of resistance once more and then continue pushing, maybe have a retest and then continue pushing to the upper side. And once we break above this high that we made yesterday at around the $0.25 mark, it's possible that we continue pushing to the upper side to around the $0.03 mark, where we'll be facing our next key area of resistance. So that was the Fibonacci. The Fibonacci's here have been perfectly respected, and it's also possible that we might find a reversal from the current prices that we have and then continue pushing to the upper side above that key area of resistance at around the $0.02 mark, and then we can push to around the $0.03 mark. And if I also apply the fibs here from this low down here to get the target area that this wave can retrace to, you can see that this wave that has been coming to the upper side very impulsively, it's possible to get its retracement using the Fibonacci. And if I have applied the fibs to that high that we made yesterday, and the minimum that retracement should do is the is this area between the fib level 0.618 and the fib level 0.382. that is between the $0.02182 mark and the $0.019 mark. So it's possible that this scenario to the lower side can play out very perfectly, and you can see that even the Fibonacci's are suggesting that it's possible that you continue seeing lower prices, and the minimum that we can expect it to go in that wave to the lower side is the $0.19 mark, where we'll be facing our key area of support. And once we get to that key area of support, it's possible that we then have that bounce to the upper side and then continue pushing to around the $0.03 mark. So those are the key scenarios that I expect to play out using the Fibonacci's here. It's possible that we get to around the $0.19 mark and then find that reversal to the upper side and then make a new higher high here, a new high, and that would be very positive, because you can see from the moment we touched the $0.16 mark, we have been trying to make highs each and every day, and that would mean that the buyers are trying to outdo the sellers. So it's possible that soon we might see that breakout to around the $0.03 mark. Also, taking a look at the indicators. On the indicators here on the 4-hour chart, you can see we are trading at around the 52 mark, and that would mean we have room for us to continue pushing to the lower side and also to the upper side. So whichever move plays out first, it's supported here on the RSI. On the MACD, on the 4-hour MACD, we have a bearish cross. We have just printed that, and you can see the volume on the selling volume is also increasing here on the MACD. So it's possible that we see a little bit of a retracement on the prices, and that would take us to around the $0.19 mark. And if we lose that key area of support, then it's possible that we get to around the $0.17 mark. So those are the key scenarios that I expect to play out, and I'll keep you updated on any movement on this chart.